All right, good evening. Welcome to the Hurley Investments Market View Commentary for Monday, the 12th of June. We are just booking along. Our guru for our videos has been on vacation. I am being told you will get caught up on a week and a half worth of videos. Will be on the My Hurley Investment site by tomorrow. It's a little bit of housekeeping. We're a little bit behind on getting videos uploaded, but those will be done by tomorrow. All right, here we go. Someone tell me what's happening this week in the stock market. What's happening this week in the stock market? Everyone should know. We've only been talking about it for the past couple weeks, right? But what is the big event that's happening this week in the stock market? There we go. FOMC rate hike meeting. Expectation, another quarter point rate hike. But what's the keyword we're looking for? Keyword to continue our new bull run. What is that keyword we're looking for in the Fed to continue the new bull run? No, it's not BS. But what they're doing is BS, right? What is the keyword that we're looking for that would continue? There we go. You guys are typing it in. The pause, right? We're looking for the big pause. So we've got, what, 16 of you here now? Let's see who just jumped in. Jim Kohler and Jim Bosserman. So Bosserman and Kohler are here. Good to have both of you with us. The key word is pause. So here's the question. Is the Fed going to pause? What do you think? Is the Fed going to pause? So, wow, I got some interesting comments that just came in there. One was probably will, but shouldn't. We have another one that says no way because inflation is still running rampant, which I would agree with that one. How about cannot pause yet because inflation hasn't come down? I would agree with that as well. I mean, all of those, in all honesty, are spot on. Let me grab that other one because I thought, where was it? Can't stop yet because they haven't overshot the mark completely. That one is hilarious. That one is really, you kind of just made my day on that one. Because I mean, it's probably pretty common, right? I think they'll raise 25 basis points or a quarter percent. All of that is correct. So it's interesting. What do you think the pros are saying? And Bill, you're not allowed to talk on this one because we already had this conversation. What do you think the pros are saying? TV analysts. What do you think those guys are saying? Maud, welcome. Good to have you here, Maud. What are the pros saying? Okay, that was a tough question. That's always a tough question. So, Bill and I actually had this conversation last week. The start of a bull market is good news. Expect this next. Well, usually a bull market, the start of a bull market after we had a bear market last year, the expectation is a 20% bear market, and you grab at least 18% the following year. And the net is almost 30 over a 2-year period of time, which with a election year, that would make sense, right? But here we have Brian Swift, Goldman Sachs guy. That's really, let's see what it says. At last, the S&P pulled out of the longest bear market since 1948. The lengthiest bear market. I haven't verified that one. That does not seem correct. But the relief, here's the bear case. The S&P gains have been carried by 7 technology companies. That's come to be known as the skinny bull market. And that is funny because the skinny bull market, right? The skinny bull market is, oh, come on, is Apple, Microsoft, Nvidia, Alphabet, Amazon, Meta, Tesla. There you have your skinny bull market. Although, if I was looking at that, Apple, Microsoft, Nvidia, Meta, Amazon, Alphabet. And so they feel Tesla is the other one in there. That's funny. Just 7 companies produced 98% of the Wilshire's 5000's return. It's over half of the S&P 500. In fact, I should really, I'm going to go ahead, I'm going to copy this in here too. It's just interesting how I just find it interesting. It's how consolidated the growth has been in the last little while. And the fact of the matter is that at the beginning of last year, we were told, and I don't know if you remember, so you can comment if you want to. The beginning of last year, we were told, don't go into the NASDAQ, right? Don't go into the NASDAQ. We're going to get so hit and killed because inflation is going to be so high and it's going to cost so much money for them to make their products, and there's chip shortages, and we're not self-sufficient United States, and blah, 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 blah. Yet, here we are, right? So it's funny because the bear case, inflation is too hot, earnings are not going up, it's going to go down. The bull case is we'll have a rubber band snap 10% higher. So out of curiosity, which one do you think is going to happen? The pros are waffling, right? The pros waffling. They don't know, and let's face it, they don't know, can't predict the future, and no algorithm is helping them. So that, I mean, that's just common sense, right? Stuart says, with the pause, a bullish move. And you know what? I'm going to agree with you. But Stuart, is the pause going to come this month? Or are they going to say they're close to finishing and do one more quarter point rate hike next month? What do you think? What does anybody think? Let's face it, the pros don't know it, which is good. Goldman Sachs, Morgan Stanley. In fact, if anything, a couple companies have reiterated that that we're probably going to go back down. Yeah, Stuart thinks that it's probably going to have one more quarter point in July, and then they'll pause. I would think so as well. That's what I would be expecting. The interesting thing is, guess what? I don't know. I don't know either. What I do know is next year is an election year. So it would not surprise me to see the economy take a hit this year, and then all of a sudden in an election year, let the free money start to flow again. That is what I would think. So it's interesting. Jim just said, I think we need to ensure protection is on. And I agree. Just about everything we have has protection on it right now. Here's the but part. And actually, Jim, I love where you're going with this. Kohler. Need to have protection. And it's funny because Apple, which is close to being fully valued, has protection at the money at that $180 range. Some Apple positions are down with protection at 170. Meta has protection at 250 and 265 for some people. Ford has protection below it at $13.50. Baidu 125. I can keep going through some of these. You know, yeah. Google L has in the money 125 short calls. We're doing a couple different things to protect, but the key issue, we are mostly non-directional, which means we make money either way. Kevin, which way are we leaning? We're leaning bullish. We're leaning to the fact that the Fed will probably make a mistake. We're leaning to the fact that they will hint that they're close to stopping, that they're going to give some type of how would I say this? I'm not thinking right. Some type of confidence, kind of like the last one, that they're close to being done. And that's just going to give the market confirmation that they don't like surprises, right? Market doesn't like surprises. So if they know what to expect, we could see another 5% higher. Goldman Sachs thinks it's 10%. The horrible part is that there is our market's up on 7 stocks. So actually, let me just put it this way. Our market gains are mostly from 7 stocks. And we have a ton of others waiting to head higher. The question is, will it be this year or next year? If I can just take a peek at a little bit on what we're in, right? Apple's pretty high. Apple's gone higher this year. It's at 182. Sorry, it's at 183.79. Apple is pretty close to being fully valued, somewhere between 183 and 188. Boeing, huge amount to go. It's at 221. 280 is where it can get to. Bank of America is sitting at $29. $55 are where it can head to. Baidu, $134. 300 is where it can get to. Disney, only at $93.14. Its previous highs were above 200 at 203, but with some of the new problems and things that are going on, the new highs for Disney are sitting somewhere between 160 and 173. That's where we're expecting those new highs to be for Disney. So that's one that's a little unique. With that said, boy, its movies are killing it. Ford sitting at $13.73. All you Ford people, we were down at $7.90 6 weeks ago. What a run on Ford. Google L sitting at 123.64. Not necessarily fully valued, but it's really going to be hard to get above 125. 125 is where Google's just at its point that it's run too far too fast. So Google's pretty close to being where it's fully valued. Let's see what else we have here. JP Morgan, 141, easily can get up to 200. Lockheed Martin is at 459, 600 is where it can be. Meta at 271. It's had a huge run from Meta. But Meta, again, can get up to at least 360. And then it's still not even fully valued, but at that point, it would run too far too fast. Micron, $67.45. I hope those of you that are in Micron realize it was at $48 not too long ago. Boy, we made a great job on letting Micron run for quite a while. But $48 to $67, it literally is almost up $20. What a great run on Micron. Pfizer. I don't know, for those of you who were starting to put into Pfizer, I think it's funny because someone here told me I hate Pfizer. I'm like, I know. Make money on cheap stock. Pfizer at $35, now trading at $39.90. Great run on Pfizer here recently. Square, not doing too much. Let's see. Target in the tank. Under Armour. Under Armour sitting at $7.62. We do have protection on Under Armour. Under Armour can double this year. Visa still stuck at 226, and I think that's where we're at for right now. A lot of opportunity in other stocks that are out there. The question is, will the market move? Is our market going to move? And that's just something that that the pros don't know and we don't know either. All right, let's see here. The briefing big picture. What did I want to spend on this one? Leading economic indexes. We're expecting a recession. I mean, that's the easiest percentage. Leading economic index right there is telling us we're in a recession going into next year. Will prior rate hikes end up squashing the demand? They don't know. The Fed finds reason to stay higher for longer with its policy rate, then Treasury yields will be poised to stay higher for longer. Expect their current trading range or something worse will remain a competitive headwinds for stocks. All right, here we go. Dow Jones Industrial. Actually, where will the markets end this week? I'm going with higher. And I'm going with higher because the Fed's going to say some type of pause. My bet is the Fed is going to give us confidence that we're near the end, or that they'll do one more rate hike in July, and then pause. That would be my expectation. But we still have some upside growth opportunity. The problem is we're coming up against a top. I mean, what? 1, 2, 3, 4, 5, 6, 7 times we're hitting that 34,000 range. Probably not going to go much higher than that. Probably going to have to go sideways. So I will expect for June and probably for the next 4 weeks, look for our markets to do one of these things right here. Let me erase all my drawings. Probably going to be in a range, and it will be a range. It might be for 4 weeks until we have the June rate hike, which I think is June 6th. Let me do a quick check on FOMC rate hike announcements. July 25th, 26. We also have the July 4th holiday in there. So we probably are going to build a base or just trade in a range after the announcement. The low end of the range could be 3,400. The high end of the range could be 3,500. But that's what we're looking at for the Dow Jones Industrial Average on where it's going to be. Stuart, I'll answer that question in just a second. The S&P, we're pretty close to being overbought. And indexes don't stay overbought for long. We have a base at 4257. We could pretty easily go up to 4,400, even though we're just now breaking the 4,300 range. This is why we have some protection on. And we might go higher and have to roll protection up next week. We'll see where we're going to end up, but there's going to be a lot of, how do I say it? There's going to be a lot of, you're going to have to be nimble. Or you're going to have to take a stance and protect yourself running into the next earnings, which would be a little bit difficult to do, to be honest with you. But the last earnings event gave us basically our last earnings on the S&P, gave us our push up to the highs, came and tested the low end of the range, and we've had 3 pretty darn good weeks on the S&P running higher. So you really can't complain with the S&P 500 and where it's going. All right. NASDAQ. What a run the NASDAQ has had. I mean, let's just look at it this year. Don't forget, NASDAQ took a dump the end of last year. 10,200 all the way up to 13,000. Yet remember, the NASDAQ is something you should not be in. That was the big run at the beginning of the year. Inflation is going to kill NASDAQ companies. Boy, did the talking heads get that one wrong. The NASDAQ's the guy that has all this opportunity because they have all the money. Huge down year last year on the NASDAQ. Probably going to have a pretty good, huge up year as it rebounds. And you can also expect the NASDAQ to also rebound going into next year, unless you'll see the Democrats are somewhat anti-technology, which is kind of dumb because they use it all the time, but you might see again some more rhetoric coming out on the Democratic side on how bad technology is and how they want to increase regulations on technology, which could hurt technology going into next year, even though it's an election year. All right, for this week, economic reports. We have the PPI on Wednesday, the CPI tomorrow. I'm not expecting, actually, it's a, yeah, CPI tomorrow. I'm not expecting a whole lot by the CPIs and PPIs. They're not a factor because they're starting to come down. And they're not a factor because they're not a factor because they're no longer making the 7/10 or 8/10 jumps. The expectations for the CPI are 0.2 and 0.4. The PPIs are negative 0.1 and 0.2 for the core. In all honesty, gasoline has been coming down again, and I believe gasoline will be the major factor for inflation for most people. I personally don't see CPIs or PPIs being factors into this week. They may run the initial futures, but it's not something that I would be worried about going into this week. It's the FOMC rate meeting and then the retail sales numbers to see if we have growth coming through sales, which again relates to GDP. Oracle reports on Monday, Lennar on Wednesday, JBL, Kroger, and Adobe on Thursday. Economic reports, Treasury budget today, CPIs tomorrow, PPIs on Wednesday, but the FOMC rate meeting will be the big one. We'll see our markets move at 12 p.m. Mountain Standard Time, 2 p.m. Eastern. That'll be when our markets move really for the next couple days. It's pretty much dependent upon that rate hike decision. Probably be pretty flat tomorrow, pretty flat Wednesday until the 2 p.m. rate hike decision is announced on Wednesday. Thursday, initial continuing claims, Empire Manufacturing, Philly Fed, retail sales. Retail sales will be the big push. How am I looking to trade? Protection is on, but for some stocks, protection is at a lower price than where the stocks are currently trading at. Kind of leaning a little bit to the bullish side. I know Key went over this last week. I'm sorry I was not available, but pretty neat. I got to take a youth group on what we call Trek. They got to act like pioneers, and they did 28 miles pushing hand carts. One of the coolest things I've ever seen, to see kids somewhat honor their pioneer history out here in Utah. And really kind of sucks to push a cart with a couple 100 pounds on it in the dust and the dirt of Utah heat and Utah desert. Not the funnest thing to do in the world, but they did it, and I was pretty proud of them. Kathy Woods missed out on NVIDIA. Dumped the stock too early. I love what we do. We never miss an update on our stocks. It's the Warren Buffett way of trading, right? We never miss an update. That also means we never miss a down day. But those down days, we do the best we can when it's most likely going to move lower to have protection on. I am so excited to get back to Money Block. I'm so excited to get back to where we can really have the opportunity to double up on some protection as things are going down. We have not enjoyed our trading practices as they were originally approved by Schwab and then restricted. Good to be moving somewhere where we can get done what we need to get done. Not to mention, I got to face it, I love seeing this lady have 83% of 2 of her 6 funds drop, 70% of 2 of her other funds drop. None of them have lost Well, all of them have lost 50% or more, which for me, I just have to love because I can't stand her. I put Spider-Man in here, and people are like, hey, but we're in Disney, and you're showing us how Sony Spider-Man makes 120 million, how Universal Super Mario Brothers is making 500 million. Yes, things are coming out. Theaters are coming back into play. Disney has quite a few good things coming up. The Little Mermaid did really good with Disney's. Just we're back to the point where the cash cow on Disney is going to come back into play. That's what we're looking for to see Disney go higher. And I have, a bunch of garbage here as I tried to copy it, but I have a little interesting tidbit on how the S&P is moving higher for 4 weeks, which is somewhat surprising for some people. Hard to see it. Nice to see where we're going with the S&P. And then I obviously have the Barron's. 7 companies are dominating the stock market's growth. And that is something that we should be paying attention to. With that said, any questions that I can answer for you guys? Any questions on what we're doing or why? Kohler, I got your facts for your transfer today. Bosserman, I think I'm still waiting on yours. Russ, we have your transfer of the joint account coming across. Maud, we have everything over. Got it. Jim, I've got it. Kohler, I've got your paperwork. Any questions you guys have that I can work on answering for you? Kevin, when Ford was low, were you able to pick up and buy more shares? Yes. We picked up more shares of Ford twice, once at $9 and once at $7.60. So yes, we have picked up shares of Ford for you twice. And it's pretty interesting to see where we're going to end up. Bosserman, thank you. And an update. My son is going to serve one of those missions where he's out there on bikes. He was all ready to go out last Thursday. Instead, we got him home, torn ACL, completely torn ACL, partial tear in the LCL. He has a Sagon fracture and a bucket tear in the meniscus. So my boy is going to go out and do some service, and instead he's decided he's going to go spend another 4 months here with the family as he goes through some kind of stupid repair on the knee. My kids are going to put me in the poorhouse with all the deductibles for medical. It's unbelievable. So here's how he did it. He actually did it skiing 4 to 6 weeks ago, but he was in what they call a missionary training center where they give these boys some training. And there was a Russian who was 2,000 points ranked higher than him in a chess game that's been beating all these American kids at chess. Well, my boy beat him at chess, and he was so excited he jumped up on the picnic table, kicked off an empty soda can, and his momentum pushed him over the table. He landed, and that was it. I can't make this stuff up, guys, but that's my family for you. But for bad luck, he'd have no luck at all. Agreed. All right, guys. Hey, next week, I will not be around. Keith will be watching the markets and such. Next week, I am trying to get eaten by grizzly bears in Yellowstone. We're taking a youth group up to Lake Jacqueline. The hike alone will probably kill me. It's a 2,130-foot elevation hike through 8.3 miles. The grizzlies are coming out of hibernation a little bit later this year because of the heavy snowfall. We have bear spray, we have grizzly packs, and a couple of us are bringing Dirty Harry's gun with bear rounds in him. Chances are we won't see a bear, but if I don't get to throw all this in, it doesn't make it as exciting to say, yeah, an old out of shape guy is going to go hike up to some lakes and spend some time fishing with some of the youth in the area. A pretty good sized group. We've got 23 youth that are going up there. And the neat thing is these aren't troubled youth. These are just youth that are once again are looking to do something a little outdoors. And we've got a good group that's going to be heading up there. So next Monday through Friday, I will be out of commission, but Kiva's watching everything, and you'll have an email that goes out to let everyone know. All right, guys, sounds good. Look forward to seeing you soon, and we'll see what the Fed says on Wednesday. Talk to you later, everyone. Bye-bye.